The economy is slowing and transitory inflation is back. These are comments from the Federal Reserve Bank, who just finished up their most recent meeting, where they said they're not going to cut interest rates right now because they're concerned about the economy, they're concerned about inflation, and they're concerned about how tariffs are going to impact inflation and the economy. But I wanted to make this video one day later because I wanted to see how the stock market would react after digesting the Fed's comments. And I also wanted to see how the stock market would react in response to President Donald Trump's response to the Federal Reserve Bank. So in this video, I'm going to talk about what the Fed said, what President Donald Trump said, and how markets reacted to all of this. So let's break this all down. Jerome Powell is the chairperson at the Federal Reserve Bank, and he said that they are predicting slower economic growth for 2025. They're predicting higher inflation for 2025. And these two things, slower economy and higher inflation, are essentially canceling each other out. Here's what he said, quote, "In the December meeting, the Fed had a median expectation of 2 interest rate cuts for 2025. But now you come in and you see, broadly speaking, weaker economic growth and higher inflation. And they kind of balance each other out." What does that mean? Well, there's two things you got to understand here. One is what the Federal Reserve Bank is saying, and number two is how this impacts you, because they are two completely different things. The Federal Reserve Bank has the ability to cut and raise interest rates. When you have high inflation, the Fed generally raises interest rates as a way to cool inflation down. This is what we saw happen between 2022 and 2024, where we saw interest rates rise as a way to combat the inflation. When you see a slowing economy, the Federal Reserve Bank generally cuts interest rates as a way to stimulate the economy. We saw that happen in 2020. When the pandemic hit, the economy shut down, the economy really went into a depression for a very short period of time. The Federal Reserve Bank cut interest rates to zero to entice people to borrow money to help stimulate the economy. And this is where he says what we are predicting for 2025 kind of balance each other out. The Federal Reserve Bank is predicting higher inflation, and they're also predicting a slower economy. Well, how do you combat higher inflation? You raise interest rates. How do you combat a slower economy? You cut interest rates. And this is where the Federal Reserve Bank is saying that they're essentially balancing or canceling each other out, which is why they don't need to cut interest rates or raise interest rates right now, because the slowing economy and higher inflation are kind of doing the Federal Reserve Bank's job. But here's the problem. The problem is that both of these two things are negative for the average person. Higher inflation. Do I need to explain why that is bad for the average person? Well, it makes consumption more expensive. That makes your extra guac more expensive when you walk into Chipotle. Okay, so we all know how inflation hurts the average person. How about a slowing economy? Well, slowing economy generally means people lose their jobs and their wages are not rising as fast as normal. So slowing economy and higher inflation are both negatives for the average person. The Federal Reserve Bank is saying, well, there's nothing we can really do, nothing we should do, because, well, they're balancing each other out. But here's the thing. You might have heard, if you've been reading market briefs or reading really any financial news, that there's been a lot of talks of concerns about stagflation. Now, stagflation doesn't happen in 2 months. This is something that takes time to build. But what stagflation is when you see a period of time where inflation is high and wages are falling because you have a slowing economy. So you have high inflation, lower wages. So it's a worst of both worlds situation. And when you hear the Federal Reserve Bank saying, we're predicting the economy to slow while inflation is rising, that's kind of a precursor to how you'd expect stagflation to go, but he tried to ignore that topic. Now, this is where Jerome Powell also said that tariffs are creating uncertainty for the Federal Reserve Bank. Yes, we covered this in Market Briefs. Yes, Market Briefs is my free financial newsletter for investors, where every day my team is breaking down what's happening in things like the economy, the housing market, stocks, crypto, and the global economy into a fun and witty and easy to read newsletter. We have hundreds of thousands of investors that are reading Market Briefs every day, so if you have not joined yet, it's free, and I have the link for you down in the description below. Here's what Jerome Powell said about tariffs. Quote, "I do think with the arrival of the tariff inflation, further inflation progress may be delayed." Essentially, he is implying that tariffs will create more inflation, more growth of prices, which will delay progress of trying to bring inflation down. But he says that the tariff inflation is, quote, transitory. Now, the reason why I'm talking about transitory inflation, in case you don't know, is after the pandemic spending that we saw by the government, there was a lot of talk about, number one, there was not going to be any inflation. And then when we started to see inflation, the Federal Reserve Bank and the White House all said that this inflation was, quote, transitory, that it was just a short period of inflation. It's not really going to create a long-term effect on the economy. Well, about a year and a half after being told that this inflation was transitory, the Federal Reserve Bank and the White House retracted their statements and said, we no longer believe that this inflation is transitory. This is why it's kind of funny to hear the Federal Reserve Bank again saying that this inflation is transitory now. Here's what Jerome Powell said. It can be the case that it's appropriate to look through inflation if it's going to go away quickly without action by us, if it's transitory. What that means is, if we, the Federal Reserve Bank, believe inflation is going to be transitory, there's nothing we need to do because it's transitory. It's just going to come and go. That's what the Federal Reserve Bank is saying today. We've heard this exact same thing before. We've heard this after the pandemic when everyone said that the inflation was transitory, and they said there's nothing we need to do because it's going to come and go very quickly. Well, here's what Trump responded with. He said this on Truth Social, quote, the Fed would be much better off cutting interest rates as the United States tariffs start to transition their way into the economy. Do the right thing. April 2nd is Liberation Day in America. So President Donald Trump is putting pressure on the Federal Reserve Bank, saying you should be cutting interest rates and do the right thing before April 2nd. So what is Liberation Day? Let's start with this. April 2nd is where President Trump and the Trump administration are anticipated to increase tariffs and create larger, more sweeping tariffs. We don't have a ton of clarity as to what that exactly means because anytime tariffs get enacted, they get changed within hours and they can be changed many times. So I don't want to explain what the plan is because it will probably get changed many times between now and April 2nd, and it will probably be changed as soon as they get enacted. So I'm not going to go over that right now. Again, we covered that in market briefs. But President Trump is essentially saying, in anticipation of these new tariffs, you may want to consider cutting interest rates. Now, I want to remind you of this. The Federal Reserve Bank, although they're called the Federal Reserve Bank, they're actually not a part of the government. They're not a federal entity. They are a private organization. The reason why that's important is because President Trump is the president of the government, a federal entity. So President Trump can't directly influence what the Federal Reserve Bank does, or at least he's not supposed to be able to. He can put pressure on the Fed, he can try to tell them what to do, but ultimately the Federal Reserve Bank has the ability to make their own decisions. Now, President Trump does have the ability to potentially fire the chairperson at the Federal Reserve Bank, but it's not very easy. It's not a very direct path. He can't just fire that person. He needs cause, and it's a much more kind of difficult process to do so, which as of the time when we're recording this video, it doesn't look like he's going to be going down that path. And Jerome Powell also has said that he's not going to be influenced or change his mind based off of what President Trump says. So you can start to see a little bit of butting heads, which did not start now. This has been going on since before the inauguration of President Trump as well. Now, in response to all of this, what happened in the markets? Well, what was interesting to me is really nothing. We didn't see much movement in the markets at all. We saw a pretty flat day in the markets, and neither of the statements by Trump or Powell really created a lot of shakeup in the markets. But one thing that you will want to pay attention to is this Liberation Day. When we start to see more tariffs, what is that going to do in markets? Because what we've seen happen up until now is once tariffs get enacted, traders freak out, even though we know that they were coming. It almost feels like, or at least up until now, that traders think that tariffs are not going to happen. It's just kind of more of a word of mouth thing, and then they're not going to ultimately happen. But then when they do happen, people kind of freak out, and we've seen the stock market fall in the last 2 months, both times that tariffs were enacted. I don't know what's going to happen in April. Maybe people will learn the lesson. We'll ultimately see what happens. But opportunity comes from chaos. So I want you to remember that as an investor, because I'm not a trader. Trading is risky. It's like gambling to me. I like to look for investments, and when you see big down days, that can also create a good buying opportunity. And this is where, again, it ultimately comes back to you. What is your goal as an investor? What is your goal? Is it to trade or is it to invest? If it's to invest and you're investing for the long term, then the day-to-day movements really don't matter. If you're investing for the long term, you want to look for good investments that you can find at a good price. And the stock market is the place where people run away when things go on sale. And so I want you to remember that now when you start to see chaos, because when you see chaos, the media freaks out. They start to post all these scary articles and people freak out and they start posting these scary posts about how they're losing everything they're going to sell and how they don't want to trade stocks and how the economy is going to collapse. I want you to be able to cut through the noise, not get caught up in the emotions, because emotions are the enemy of profits, and I want you to be able to find the opportunity, because you bet we're going to continue to see chaos. We're going to see some interesting things happen. We're going to see fights between the president and the Federal Reserve Bank. We're going to see fights with tariffs. We're going to see fights with Doge. We're going to see fights with economic policies. They create a lot of controversy. They create a lot of emotion. They create a lot of political whatever. I want you to find the opportunity, because this channel is not about fighting politics. This channel is about finding opportunity. And in order to find that opportunity, you got to shut up the emotional part of your brain, which is hard because the whole world wants you to be emotional. They want you to get caught up in the drama. They want you to get caught up in the anger. They want you to get caught up in the excitement. But at the end of the day, it doesn't matter what's going on. There's always going to be opportunity. And do you want to know something? Wall Street gets rich from it. Wall Street knows how to do it. That's why they get rich, whether it's a Democrat or Republican in office. I want you to think the same way. I want you to understand how you can think through things like an investor, and that requires you to, number one, shut off the emotion. Number two, have money to invest. Because you could see a great investment opportunity, but if you don't have any money to invest, it doesn't do you any good. And then number three, execute. Be willing to make mistakes. Look, I get it. I'm just a random guy on YouTube. I'm not a financial advisor. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But at the end of the day, unless you take action, you're never going to see the upside. You're going to make mistakes. Every investor does. I made my fair share of mistakes. I've made a ton of mistakes. I've lost a lot of money, but I've also made money as well. And you're never going to be able to see the successes unless you go through the mistakes. They're part of the process. So when you get burned, when you lose, it's okay. Use it as a learning process. That way now you can do it again without making the same mistake as before. So that's an update of what's going on right now. We'll be keeping you posted here. I'll be keeping you posted on market briefs. If you haven't joined that, make sure you do so. And I will see you on YouTube tomorrow.